there. Joining me for today's Options Insight with a look at where stocks might be headed from here is Larry Shover. He's Chief Investment Officer at SFG Alternatives. He joins us from the CME. Larry, thanks for spending some time with us today. Tell me what you think, first of all, of this overall market. I came in with a trader today who expected the top to blow off, and it's just really not that exciting.
Well, Matt, you know, I think the most hated market of all time is what we're witnessing right now. And the market's just hopelessly resigned to residing between 1840 and 1880 until further notice. You know, what's deeply fascinating, not just looking at volatility of the S&P 500, which would be the VIX, but look at other asset class volatility, gold, oil, fixed income. All those volatilities are grinding towards the bottom. It seems like right now we're in a very apathetic market right now and just waiting for that next move, and no one knows what will cause that catalyst to grind us higher or lower.
You know, you say grinding. Some would say gold futures are rallying because it's from obviously a very low bar, from a 10-week low here. Yeah. Where do you think we're going to see gold moving going forward?
I'm still very bearish on gold, and the overlying element to that is that the normalization of monetary policy around the world, especially in the U.S., is going to act as a cross over gold's head. I mean, it's going to be really hard for gold to rally from here. I mean, right now, there's no concern for a wind down of QE, especially when you think that that might cause breaking of the credit creation in the United States. There's subdued premium in Asia for gold right now. That tells me that there's a lot of supply. And look at India. I don't think they're in any rush right now to relax their importation policies that they instituted last year. So all that combined, I just can't see gold going any higher. In fact, I think $1,200 makes a lot of sense by the end of the year.
That's your take on GLD. What's your trade?
Yeah, I like GLD for a lot of reasons, especially because implied volatility is so very low right now. So you take advantage of low vol and directionally biased. I look at the December. You have 7 months to play with this. 120, 100 put spread. Right now you can buy that for under $4. What you need is about a 6% down move, a 6.5% down move to break even on this trade. Best case scenario, gold drops 15, 20%, and you've cashed in. You're risking about $4 to make a net of 16, so it's $400 to make $1,600. I think that's a really good play, especially when you look at implied vols.
Larry, one of the reasons people were so excited this morning was Apple's earnings last night. It announced also an increase to its stock buyback and dividend program that everyone was pumped about. What type of action are you seeing in the stock?
Well, you're seeing implied vols drop quite precipitously. I mean, yesterday there was so much bearishness. You saw put skew. The amount people are willing to pay for puts increased quite a bit. People were very, very bearish. And what's not to like about the report last night? I mean, increased dividend, buyback, 7-for-1 stock split, all these kind of things. And so we're seeing put skews relax. We're seeing implied vol down. I still like the stock. I mean, I love what happened yesterday, but I've cautioned this over and over again. I'd buy the stock, but I would also buy a put or a put spread against it.
All right, so stay a little bit hedged is what you're saying on Apple.
Yes, exactly.
All right, Larry, thanks very much. Larry Shover joining us there from the CME. We are on the markets again in 30 minutes. Lunch Money is up next. Stay with us here on Bloomberg Television.